Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Ribbon Communications Inc. quarterly report. Ribbon Communications Inc. offers a wide range of businesses and services across various segments. The company's main offerings include software and hardware products for Voice over Internet Protocol (VoIP), VoLTE, LTE, and VO 5G communications, unified communications and collaboration solutions, session border controllers, network transformation products such as signaling products, call controllers, media gateways, and application servers in the IP optical network segment. Ribbon Communications provides hardware and software products for IP networking, switching, routing, and optical transport, 5G native solutions for mobile backhaul, metro and edge aggregation, core networking, data center interconnect, multi-service access, and transport solutions for wholesale carriers. These services cater to various industries including utilities, government, defense, finance, transportation, education, and research, as well as service providers and enterprises. The stock price of Ribbon Communications Inc. has remained relatively stable over the past year, with no significant changes exceeding 4.46%. Despite various news events, including quarterly financial results, product launches, and strategic partnerships, the company's stock price has not declined by more than this threshold. Several factors have contributed to this stability. The company's strong financial performance, including exceeding analyst expectations in some quarters, has likely boosted investor confidence. Additionally, Ribbon Communications' innovative products and solutions, such as its AI-powered Acumen platform and advanced optical transport solutions, have demonstrated the company's capabilities and potential for growth. Furthermore, strategic partnerships with major players like NGN and Verizon have solidified Ribbon Communications' position in the market. The company's commitment to expanding its portfolio of certified solutions and showcasing advancements in IP optical networking has also contributed to its stability. Overall, while individual news events may have had varying impacts on the stock price, the cumulative effect has been a stable performance with no significant changes exceeding 4.46%. The primary drivers of revenue growth or decline can be summarized as follows. Revenue growth is primarily driven by the expansion of cloud and edge segment revenue, IP optical network segment revenue, and increased sales to U.S. service providers, particularly Verizon. Additionally, higher sales in India and EMEA, as well as increased professional services revenue in both segments, have contributed to revenue growth. On the other hand, revenue decline is attributed to modestly lower renewal rates in the cloud and edge segment due to decommissioning of older legacy equipment, lower maintenance revenue in the same segment, decrease in sales to enterprise customers, and a decrease in sales to service provider customers. Net income and profit margins experienced fluctuations in the given period. For the 3 months ended September 30, 2025, net income decreased by $1,651, 1.5%, compared to 2024, while profit margins dropped from 52.1% to 50.1%. However, for the 9 months ended September 30, 2025, net income increased by $204, 0.1%, and profit margins declined from 51.4% to 48.5%. The reasons behind these changes are attributed to various factors. Tariffs, trade restrictions, supplier disruptions, and global supply chain issues negatively impacted the company's performance. Additionally, higher sales of hardware products and professional services with lower gross margins contributed to the decline in profit margins. The company is indeed generating positive operating cash flow. This is evident from the financial summary, which states that the net cash provided by operating activities has increased significantly from a negative $11,527 in 2024 to a positive $22,159 in 2025. This upward trend confirms that the company's operations are now generating sufficient cash to cover its expenses and investments, indicating a healthy financial position. The company's debt level and interest expenses have undergone significant changes in recent years. While long-term debt decreased by 5%, the current portion of term debt increased by 41%. This increase is offset by a decrease in net cash used for financing activities due to principal payments on term debt. Interest expenses also saw a mixed trend, decreasing by $346, minus 2.9% overall, but increasing by $6 million due to reclassification from accumulated other comprehensive income. The sale of notional amounts of the interest rate swap contributed to the decrease in interest expense. The company's financial performance varied across different segments and regions. In terms of segments, the Cloud and Edge segment performed poorly for the first 3 months due to lower sales to enterprise customers, but showed improvement in the subsequent 6 months with higher sales to U.S. service providers and enterprise customers. On the other hand, the IP Optical Networks segment consistently performed well, driven by higher sales in India and EMEA. Regionally, the United States was a standout performer, delivering strong results for both 3 and 9 months ended September 30, 2025. In contrast, Europe, Middle East and Africa, EMEA, and Asia-Pacific regions experienced poor performance in the first 3 months, but showed improvement in the subsequent 6 months. The other region performed poorly across both periods. Management's outlook on company strategy. The company expects revenue growth in 2025, driven by expansion in both segments. However, gross margins are anticipated to decrease slightly due to increased R&D expenses. To mitigate this, the company plans to streamline operations through facility closures and workforce reductions. Key strategic initiatives include expanding IP routing solutions, enhancing optical transport portfolio features, and supporting SDN management and orchestration platforms. Overall, management is focused on optimizing costs while driving growth and innovation. The company has made several strategic moves through acquisitions and divestitures. Notably, it acquired ECI Telecom Group Limited. This acquisition is the only recorded instance of a purchase in the provided financial summary. On the other hand, the company has engaged in various divestiture activities. These include selling interest rate swaps back to counterparties for $3.1 million and $19.2 million in 2022 and 2023, respectively. Redeeming preferred stock worth approximately $63.5 million on June 25, 2024. Exercising warrants resulting in a decrease of warrant liabilities by $150,000. These transactions demonstrate the company's efforts to manage its assets and liabilities through strategic acquisitions and divestitures. The company has demonstrated a commitment to returning value to its shareholders through various means. In 2024, it paid out $6.7 million in dividends as a result of redeeming preferred stock liability. Additionally, the company has been actively buying back shares under its 2025 repurchase program, with total expenditures reaching $14.9 million by September 30, 2025. Concerns about inventory buildup and supply chain disruption. The company's financial summary highlights concerns regarding inventory buildup and supply chain disruption. The data suggests a significant increase in product inventory by 16.6% for the 9 months ended September 30, 2025 compared to the prior year. Furthermore, the current portion of inventory at September 30, 2025 is higher than December 31, 2024. Additionally, supplier disruptions due to global economic uncertainty, tariffs, trade restrictions, inflation, wars, and national security concerns pose a risk to the company's supply chain. These factors may lead to potential stockouts or delays in production, exacerbating inventory buildup issues. That concludes the financial summary for Ribbon Communications Inc. Feel free to comment below, and I will be happy to answer them when possible.